All right, let's rock and roll. So we got about an hour to have some fun today. So go ahead and scan the QR code, sign in, let us know you're here. Um, Today we're going to be talking about raising some money. This is part of our series, Turning Land into New Housing Communities. If you don't know already, my name is Brandon Cobb. I'm one of the co-founders here of HBG Capital. We manage about 20 million plus of new land development right here in Nashville, Tennessee. I raise all the money for our developments. And my partner, he sees the civil engineering, the acquisitions, and all of the city planning entitlement process. There we go. Can you see everything okay? All right. Perfect. You got it where we can switch over here. So this is one part of a 6-part series. Today we're going to be talking about how to raise capital from friends and family. Last week we talked about the foundations, but this is one part in a 6-part series. So we'll be kind of going through one of these parts every single week. So we started with, how to find and target the right land. Then we covered the land due diligence. Is this a deal? We talked about designing your community and managing the civil engineering process. We talked about the foundation that you need to first start raising capital. That was last week. Today, we're going to be talking about how to raise from friends and family. And then next week, we're going to be talking about how to raise from accredited investors, basically once you run out of all of your friends and family's capital. So before we jump into today's topic, how to raise capital from friends and family, what exactly is land development? How do you turn land into new housing communities? This is something that we learned. There were some questions around. Not many people knew exactly what it was. So this is a very clear representation. You've really got two exit plans when it comes to land development. One, as you can kind of see at the top here, you can take a piece of raw land and then you can get it approved for the community and you can just sell the paper. So you don't have to do any grading. There's no roads, no utilities. You're literally just getting a piece of dirt approved for development and selling it. This is great if you don't have the foundations to raise a lot of money and you just want to get something approved and sell it. I'll show you what one of those deals looks like here in a second. The second is once you've got it approved, you actually go in and do the development work. So that's what the bottom is here. You can see you go in, you put the roads, you put the sewer, you put the water, and you get it approved for construction. When I say construction, I mean building homes on it or building apartments on it or building industrial buildings on it. And one of the reasons why we love this strategy is you can add so much value during both of those processes. So here's what that looks like. Here's an example of a deal that we did. In the bottom left, you can see we got this piece of land approved for 43 townhomes. All we did was we sold the paper. We didn't do anything else to it. We got it approved, and we sold this to a big builder that wanted to do the development on it. And, we made about $446,000 on this deal. We actually did a little profit split because someone brought us this deal that didn't know how to get it approved. And we worked with them and we did all the heavy lifting and financed the civil. And we did a profit split. Total profit on the deal was about $446,000. It took 12 months to do. So that is a great example of what a paper lot deal looks like here at the top, just getting it approved and selling the paper. Now, the bottom here, developing the land, this is an example of a project we did. We raised the money. We called it Cottages at Carriage Way. This was, I think it was 74 home sites that we developed. And, as you can see, we made just under $1.2 million on that project. But no, both of those sites right there together, 70 homes. So this is real stuff that you can do. And if you want to do the land development stuff, you're going to need to learn how to raise the money, which is what we're going to talk about today. Quick recap. Last week, we talked about the foundations that you need to raise millions. Biggest mistake we see people who go out and raise money make is they don't set a solid foundation first. You want to be able to convert people once you spend the time, effort, and money to go after them, in order to convert them, you got to build a solid foundation. So we talked about that last week. We talked about the psychological hurdles that you got to overcome for people to give you money. We talked about how to get people to know, like, and trust you. We talked about the biggest myths when it comes to raising money. And we talked about how to the differences between a 506B and a 506C syndication. And most importantly, how to stay compliant with the SEC. You don't want to go to jail. There's definitely some big things that you want to do in order to stay compliant before you go out and you start raising money. So we talked about all that last week. This is what we're going to talk about today. We're going to be talking about how to raise money from friends and family. I'm gonna share my story, how I was able to raise $15 million. We're going to touch base on the journey of every capital raiser. We're going to talk about revealing your secret identity, how to reach out to friends and family, talk about your 30-day capital raising challenge. We're going to be talking about how you need to treat your deal like it's a movie. We're going to be talking about how to create curiosity, anticipation around your deal, and scarcity, which is going to make people pull the trigger. What's the whole goal behind this? Why do we do these turning land into new housing community series? So our goal is to build a community. We want to bring together developers that share a vision to bring their projects to life. And the best way to do that is to create a community where everybody is giving back and sharing what is working for them. You know, we want to teach this stuff because we think there's a huge opportunity here. There's not many people out there sharing how to turn land into new housing communities, and we want to be a big part of that. So our goal is to build a community. You'll hear more about at the end. You know, we're in the process of creating a mastermind community, and we're very excited about that. Disclaimer real quick. So I'm not an attorney. Everything I say about raising money, take with a grain of salt. You need to first hire an attorney that can advise you on the proper ways to do it compliantly. I can give you my 2 cents and what's worked, but I'm not an attorney. Make sure that you hire one. Don't just go out there and start raising money because you watched this presentation. Make sure to always get the advice of an attorney because I want you to stay out of jail. All right, with that said and done, do me a favor, go ahead and post your questions in the chat or post them in the Q&A because this is a webinar. It's not a Zoom room today. We're upgrading. So go ahead and throw your questions in the chat along the way. And at the end, we're going to make sure that we can get to them. Before we kick this thing off, I want to ask you a question. What would you do with an extra $5 million bucks? If you could raise another $5 to $10 million for your business, what effect would that have? Would you do more real estate deals? Would you be able to do bigger and better deals? Would that help out with cash flow with your business? Right? Would that be able to help out with some of the, the interest payments that you got on some of your debt deals? That's what we're going to be talking about today. This skill set, raising capital for your real estate deals, I believe is the highest value skill that you can possibly have, because he who controls the gold controls the deals. And so think about what effect this would have on your personal life if you had the ability to go out and get another $5 to $10 million, because what I'm going to share with you today has the ability to do that. So here's my story. I started out in medical device sales 8 years ago. If you told me we'd be inventing these new neighborhoods, I'd have looked at you like you had 20 heads. I'd had no desire to get into real estate. In fact, I absolutely loved my job. Young guy in his 20s. I get to wear scrubs every single day to work. Thought I was the coolest kid in school. Rubbing shoulders with successful orthopedic surgeons. I had a job where I felt like my product was making a difference. I was actually impacting lives. And medical device sales was my dream job. I had no intentions of getting out of that until one sunny Friday afternoon at the Starbucks over in Weston here in Nashville. I met with my boss, and before I could tell him how great of a Friday I'd had and how much money I'd made him, he fired me. And that was when I realized a big life lesson. It doesn't matter how many hours you put into your job. Doesn't matter how much blood, sweat, and tears you put in your career. Nobody's going to look out for your financial well-being but you. And you can be as loyal as you want to these companies. You can work for them for decades, but at the end of the day, you're a number, and these companies are going to do whatever's best for them. And that day, I lost more than just my job. As anybody who's ever lost a dream job knows, when you work for something for years and you finally get that status, you get that dream job that you want, and you lose it, you're not just losing a job, you're losing your sense of identity. And so I had my whole identity wrapped up in being a medical device sales rep. And I had to go on this journey to basically refine myself. Now, this is a fun picture of me right here in the red. This is me 8 years ago flipping my first house. I literally sold all my retirement accounts. This is my RAV4. This is probably like my eighth Home Depot run of the day. I had no clue what I was doing. It was a house in Shelbyville. I was driving an hour and a half from my little condo in Bellevue, Tennessee, to flip this house. And that's really how my partner and I started a real estate business, is just bootstrapped it and figured it out. We ended up growing that business to flipping about 30, 40 houses a year. And we ended up starting our own general contracting company. And we started building houses because we realized we could make more money building houses than we could flipping houses. And so here at the bottom, you can see this is me constructing one of our homes. You can see the framing is going up. I think this was like a tornado house that got hit and we had to like reframe it up. So we started building a lot of these homes all over Nashville, Tennessee. And if you're from Nashville, Tennessee, you know that we were doing a lot of these tear down, build little onesie twosie houses in the gentrification areas that were changing. And what we realized was, holy cow, it's a lot of work building 20, 30 houses spread out all over the place. Wouldn't it be easier if we could build all the houses in the same location? Light bulb moment. Now we see why these builders are building these neighborhoods. It's all in the same place. You have economy of scale. So we started going after parcels of land where we could build multiple houses on that plot. And one day, as we were getting ready to go vertical on a bunch of homes, we had the development looking good, the roads were in. We got a knock on the door from a national home builder. And they said, hey, we really like your development. I think we're going to buy it from you. And we said, no, you're not. We don't want to sell it. And they said, well, here's what we'd be willing to give you guys for it. And we said, it's for sale now. You can have it. And do you want the one across the street too? We're about to do, because we'll develop and sell that one to you as well. So this really opened up our eyes, and we realized that, okay, we could either compete with Wall Street, building these affordable entry level homes, or we could be on the side of the table that they're cutting checks to. Because these publicly traded companies, these Lennars, these D.R. Hortons of the world, they're funded by Wall Street. They're publicly traded. They have to feed the machine, and they can literally buy as much land from us as humanly possible. And so that led us to doing a lot of our land development projects. As you can see here in the top right corner, I'm out there reading the blueprints for a 74 home lot development that we're doing. So I share this with you because I want to compress the time that it takes you to figure this out from decades into a year or two. I want to take what took me 8 years to figure out and compress it down into a year or two, because I know that you can do this and you don't have to spend 8 years figuring it out like I did. So I'm going to be introducing this concept of a syndication. We talked about this last week. Some of you might know what this is, but a syndication is a way of crowdfunding people's money to buy large buildings. So as you can see down here on the right, these are a group of investors. None of them individually can buy this building, but if they pull their money together, they can buy the building. And so a syndication is like an airplane. One person can't afford to take the airplane to where they want to go. But if everybody buys a ticket and they split the cost, then everybody is able to get a really good deal and get to where they want to go. So this is a vehicle that is very powerful. It allows mom and pop mainstream investors access to large commercial, large land development, large deals that normally were reserved for Wall Street. And so this is an alternative investment class that is becoming very popular. And I'll tell you real quick how syndications changed my life when we were flipping houses and building houses. I'd raised, maybe 3 or 4 million bucks at the time. The problem was I was raising debt, which means if I was flipping a house that I was buying for $150,000 and I was putting $50,000 of rehab cost in it, I was needing $200,000. And when I started, I was doing hard money loans. And as anybody who has ever used hard money loans before, I realized that these monthly interest payments are not going to work. I can't scale my business. It's too much. So I started raising private money. And when I raised private money, the terms that I would have with the private investors was, hey, I can pay you double-digit returns, but you have to pay it on the back end. So I effectively was able to reduce my debt monthly payments to zero. I had $0 in interest payments every month, and investors got to take their interest payments on the back end when the homes were built and sold or the house was flipped. This was a game changer for my business. It changed everything. It solved my cash flow problems. But I still had a problem: scaling. I was raising dollar for dollar. In other words, I was raising debt. If I needed $200,000, I had to go find a private investor that had $200,000, which was an issue because I realized to get to where I wanted to go, I needed to go find like 25 million bucks. And I looked at how much work it was to raise $3 or $4 million, and I said, "Oh my gosh, this is going to take forever." So what we did was, when I discovered this syndication method, I realized that I could take our investors' money and convert it from debt into equity. And so instead of having $4 million of debt, I used a syndication model. I converted it into equity. I went to the investors and I said, hey, good news. We're going to increase your returns from 10% to 18%. We're going to make you equity partners in the deal. And, you guys are going to become partners with us. And they said, man, we're same type of deals that we're doing. I said, same type of deals. We're just going to do an equity structure instead of debt. And I kid you not, we converted that $4 million into equity, and overnight we had access to over $15 million of bank debt that we could go get access to. And so overnight we grew to doing 20 million. I mean, literally, if you just,
sorry to interrupt. Can
Yeah.
you explain really quick for folks that are kind of not versed on this? Exactly what do you mean? How did you take the equity? So you converted them from a debt position to equity, but how are you able to go get? Can you refine that a little bit?
Yeah, the difference is, imagine having $4 million in your bank account and you go to the bank and the bank's going, oh, instead of looking at that $4 million as debt, as a liability on the balance sheet, that $4 million is equity.
Right.
It's an asset. And so just think what a bank is willing to give you if you can show them $4 or $5 million on your balance sheet. We use that money as down payments to get construction loans. We use that down payment to charge GC fees to our construction company to help out with cash flow, acquisition fees for doing the work of finding the deals. We had access basically to money to help grow our business and scale things in a real estate deal. It was a game changer. Does that answer your question?
Absolutely.
And feel free to stop me anytime. So this is the journey of every capital raiser. They start out with their friends and family, and then they run out of their network's money. Then they move on to accredited investors. This is people that they don't know. And then they move on to a fund of funds model, institutions. In other words, they partner with other people who are raising money, hence the word fund of funds. And then after they get enough projects underneath their belt, they have a good track record, they can go in and attract institutional funds. These are family offices and institutions that want to write $5, $10, $20 million checks, and they only do that with people with a track record. So this is the journey. And so we're here today, and next week we're going to talk about accredited investors, but everybody starts out with friends and family. All right, so we're about to get into the raising capital portion of this presentation. If you want an example of one of our pitch decks, we've got several different types of pitch decks. Send your email to this phone number, 901-596-6425. We had a problem with stuff going to spam and email, so make sure you send it to that phone number. And if you send your email to that phone number, we will make sure that you get a copy of our pitch decks. These are the pitch decks that we use to raise millions of dollars from investors. I think that you will like it. You can literally just copy and paste, what we're doing. It works, and it's completely free. Just send your email to that phone number. All right, so let's get into it. Today, we're going to be talking about a 506B syndication, which is what you want to use for friends and family. Depending on who you're raising money from, you need to follow the laws and the guidelines, and this is what your SEC attorney will set you up with if you want to raise capital from your friends and family. To set up a 506B syndication, the SEC wants to see that you have an existing relationship, hence friends and family. They don't have to be an accredited investor. They must have experience investing and be a sophisticated investor. In other words, you can't go raise from your aunt that's never invested in anything before. You have to kind of prove that they're sophisticated. And you cannot advertise your deals or returns. So this is only cold reach out to people that you currently know. Step one, let's talk about revealing your secret identity. Biggest issue that people have when they go out and try to raise money from friends and family is this. Their friends and family see them in their old identity. In other words, when I was raising money from friends and family, when I first started out, big mistake I made was everybody knew me as Brandon, the medical device sales rep. They didn't know me as Brandon, the real estate guru guy. And I had to shift their perspective of me from Brandon, the medical device sales guy, to Brandon, the real estate guru guy. If you cannot shift your friends and family and network's perspective of your identity, they will not give you money. They don't want to give money to Brandon, the medical device sales rep guy. They want to give money to Brandon, the guru guy. So let's talk about how to do that. This is where we introduce the concept of the 30-day social media challenge. The 30-day social media challenge is you doing videos every single day of yourself revealing your secret identity, going on, showing your projects, showing and talking about what you're doing. And the number one rule here I'll give you is don't teach, document. Just document and talk about what you're doing. Everybody feels like they need to teach something on social media. Don't teach, document. This will help you create the content that you need. Most people don't want to get started on social media because they're like, what am I going to teach? What am I going to talk about? Just document the things that you're doing. So some examples are, walk a project and talk about a project that you're doing. Unveil your secret identity and do this every single day for 30 days before you start reaching out to people. I promise this will be a complete game changer in how people see you, and it's going to lay a solid foundation when you do start reaching out to people and making posts. I promise people will come out of the woodwork to give you money. And you'll be surprised when you do this 30-day challenge and you talk about your deals and you talk about what you're doing and you're talking about how much money you're making and you're talking about how excited you are, and people are sensing this transfer of enthusiasm about your deals, people will reach out and inquire about it. People will ask about your deals. And I promise you, you will end up raising money from this 30-day challenge alone right here. So the first 30 days is all about unveiling your secret identity and shifting people's perspective of who you are, your old identity into your new identity. Now, step two, once you've done this, it's now time to build your pipeline of permission. So you go through and make a list of everybody in your phone and everybody in your email contacts of who you're going to reach out to. It's very simple. You take the time to compile the list. If you don't have at least 150 people in this list, then you're not trying hard enough. You should have over 100 people that you can reach out to. And it doesn't matter who they are or what they do. If you have a relationship with them, if you've met them at some point in life, they need to go on this list. Next is sending out your emails. So here's a key here. I mean, this is huge, guys. I wish I had known this. The biggest objection you're going to get is if you try to reach out to somebody when you have a deal. Hey, I got this deal. Check this deal out. This is what I got, and it's over in this great part of town.
And I got to close in 5 days.
I got to close it in 5 days, 30 days. Like, hey, do you want to invest in my deal? Nobody likes being pitched out of the blue. Instead, you're building your pipeline of permission. Notice how I called it pipeline of permission. You're reaching out and you're going to say, hey, this is what I'm doing. Just wanted to make you aware of it. Right now, we don't have anything. But if I do have an opportunity in the future, are you interested in checking it out? Are you interested in doing more? So this is an email that I do. It's very simple and straightforward. Hey, hope you're doing fantastic, keeping your inbox under control. I'm reaching out because we're in the process of ramping up our real estate developments. We're aiming high, about 20 million in annual projects this year. It's like Monopoly, but real without the little top hats. Right now, I'm building our investor list for those interested in being a part of our upcoming deals and our projects. I got nothing open at the moment, but when the right deal pops up, they would get a heads up. Do you know anyone interested in learning more about earning healthy double-digit returns on their money secured by Nashville, Tennessee real estate? Notice I didn't say, are you interested? I depressurized the situation. I took the pressure off them to respond to me directly. And I said, do you know anybody? Now, this does a couple things. One, it takes the pressure off of them specifically. But two, it also asks for a referral. Guys, I can't tell you how many times somebody said, actually, I know somebody that this would be a great benefit for. I remember we needed to raise $550,000 and I was scrambling for capital at the time. And I'd sent this message, a text message to somebody. And they said, no, I'm not interested, but I know somebody who is. And they connected me with someone. I went and met them and I got to know them. We built a relationship and that person ended up giving me $550,000. So just because someone in your network doesn't have the money or isn't interested doesn't mean they can't connect you with someone that does have the money. Let's talk about what let's see. There we go. Let's go over. So the phone call, email's great. Phone calls are even better. So what does that look like? It's pretty straightforward. You're calling, you're catching up real quick. And here's the magic thing to ask. Can I ask you a question? That's it. Can I ask you a question? And then here's where you go into the opportunity. Hey, as you know, real estate market's been in a correction the past 2 years. Rates have gone up. We're now seeing some fantastic buying opportunities. It's like being able to buy property back in 2009 and 10. Right now, we're building our investor list of those interested in being partners in our future deals. Nothing currently available at the moment, but when the right deal pops up, they get a heads up. Do you know anyone interested in learning more about earning double-digit returns on their money secured by Nashville real estate? So as you can see, very similar approach to the email. We're asking people if they know anybody. We're not asking if they want to invest. We're asking, do you want to learn more? Here's another piece of advice that I wish I'd gotten when I first started out. If you want advice, ask them for money. But if you want money, ask them for advice. A great way to pitch one of your deals is not to pitch the deal. It's just to say, hey, can I ask you for some advice? I've got an opportunity we're working on for months now, and we're getting ready for the big release. I'm looking for some honest feedback before the release. Someone to play devil's advocate, shoot some holes in it, tell me why it's a bad idea. Would you mind taking a look? This takes the pressure off the situation. They know that you just want advice, and that's it. You're not pitching them anything. And you'll be surprised how many times they say, yeah, I'd be interested in investing in this.
And it's not just I mean, that's real too. Like we actually you do want advice and you don't want to, people, those folks, even if they don't have money, the advice may be worth more because we want someone to put holes in our plan.
Yeah.
Because we want to know that if we're, jumping with a parachute with a whole bunch of holes in it or what, and we want to seal all that up. So, because we're going to have assumptions about the objections that are going to come, right? And we're going to be getting ready to counter those objections. But there may be somebody that you trust and they like you and they know you, they're going to be like, yeah, dude, there's a hole here and there's a hole here. Like, is that what you're talking about?
Yeah. Well, think about if you're going to go and pitch this in front of a bunch of people eventually, which is what you want to get to. Think about it. If there's a burning hole in it that you don't see, it's
Right.
nice to get ahead of that and pitch this to 4 or 5 people, get their feedback, and build their feedback into your presentation.
Yeah.
Very powerful.
And then another thing is when you do have, let's say there seems like there's a hole in it, right? And you ask this person for advice, when you have an actual solution to it, that person's gonna be like, oh yeah, that's perfect. And you solidify then your subject matter expertise at that point too.
Yep, 100%. All right, so step 3, your deal is a movie. Now it's time to build anticipation. This is something else everybody misses. Everybody wants to just go and straight pitch the deal. We are animals when it comes to how we make decisions. We are very emotional. We make emotional decisions. You got to create hype around it. So what happens when a movie's coming out? Well, they're building anticipation. They start advertising sometimes a year before that movie is released. They will have trailers, multiple trailers that come out. They will have the actors go on the shows and start promoting the movie ahead of time, dropping little teasers about it. They do the red carpet walk. They've got like a prime time premiere of it. They do a wonderful job of building anticipation. So let's talk about how you can do that. Once you have your list and you've captured their emails and you got the phone numbers, now it's time to send out some emails to start building anticipation for the big release. So here's your day one email example. Hey guys, we're excited to announce our next acquisition opportunity for investors here at HBG Capital. We've been patiently waiting on the sidelines for an exciting opportunity, and we're excited to announce we have one. 10 Main Street will be our firm's first new commercial acquisition. The webinar will take place Friday, March 8th, 6 p.m. Click here to register. As you may have already heard, the seller is in their 80s, retiring from real estate. He's ready to hang up the hat and enjoy retirement, so he's very motivated to sell this property. Over the next 3 days, you'll receive some top highlights. What gets us most excited about this deal? Today's highlight is the value add strategy to increase the property's value, doubling the rents. To force appreciate, you have to raise rents. That usually involves renovating the units to achieve higher rents, but not for this property. The rents have not been raised in over 8 years. Market rate rents show we can easily double rents. We will show you that Friday, March 8th, 6 p.m. Central Time on the release. Why we love this deal? Number 1, motivated seller retiring from real estate due to their age. Number 2, rents not raised in over 8 years. 3, 4.5% seller financing, fixed rate debt. 4, location. And 5, the 5th and most exciting we'll share during the release on Friday. To see this opportunity, you must register your email below. So take a second, do that right now. We look forward to seeing you there. So that's day 1. Here's day 2. Hey, as we mentioned yesterday, we're for an opportunity. The webinar this Friday, March 8th. Click here to register. Yesterday, we talked about 1, how the seller is old and motivated to sell the property. 2, how the rents haven't been raised in 8 years. Today, I'm sharing another reason we're excited about the deal. We don't have to go to a bank. We were able to negotiate a 4.5% interest rate with the seller to finance this deal. We'll be raising the funds for the down payment and repairs to force appreciate the value of the property. You can't even go to a bank right now and get that rate. Also, it's fixed rate debt, so the interest rate cannot move on us. Why we love this deal, yada, yada, yada. To see this opportunity, you must register your email. So take a second, do that right now. We look forward to seeing you there. P.S. Feel free to hit reply if you have any questions before Friday. All right, day 3. Hey, I wanted to remind you that we have a new investment opportunity we want to share with you. You are invited to join us. The release will take place Friday, March 8th. Click here to register. Tuesday and Wednesday, we talked about how the seller is retiring and they're old and they have to get out. The rents have not been raised in 8 years. How we've got fixed rate debt, seller financing, 4.5%, how we can't even go to a bank and get that rate. Today, I want to share with you the 4th reason we're excited about the deal, the location. The property is located smack dab in the middle of downtown Clarksville. We know and love. We like this suburb. It's located on the Riverwalk area, the distance to the brand new F&M Entertainment Arena. If you don't already know, the Riverwalk area downtown is already seeing massive development. The city wants the whole area to be transformed over the coming years. There will be lots of newly added foot traffic around this property, which is going to increase the value from the surrounding developments. Why we love the deal? A, B, C, and D. To see this opportunity, you must register your email. So take a second and do that now. All right, we've got day 4. So this is the release date. We're going to send multiple emails out today because, again, we're building excitement. We're building anticipation. Tonight, we'll be releasing the new opportunity. It's tonight at 6 p.m. You must register. As we mentioned this week, here's why we love this deal, A, B, C, D. And tonight, there's a 5th and most exciting reason that we're going to share during the big release. So stay tuned. You don't want to miss it. To see this opportunity, you must register. And here is where you've got to throw a little bit of our secret sauce on it. This is a very important part of this email. Given that we have received so much interest in the offering already, we wanted to ensure that as many of our investors are registered to attend the upcoming webinar and have the opportunity to get their questions answered. Here are a few things we'll be covering during the webinar. Strategic advantages created by the team, downside protection, and potential upside. Please note that you must register to see the opportunity. See you tonight. So what did I do there? Given that we have received so much interest in the offering already, I have told everybody that, hey, this is a hot commodity. I am building curiosity, and I'm now making people want something by telling them that other people have shown interest and they might miss out. So that is a very key psychological trick that I just used in that email to get people to sign up and get people to pay attention. All right. It's still the release day. We've got the 1-hour reminder. Hey guys, quick reminder, our opportunity is going to be released in 1 hour. Click here to register. And then boom, here's the big release. It's here. Watch the video. We're live. Click here to see the presentation. Here it is. The movie is coming out. We've built the anticipation. The big release is here. Boom. Now we get to the fun part. Pitching our deal. Let's go over the pitching do's and don'ts. And I can tell you that the don'ts are more important than the do's. When it comes to pitching, don't talk too fast. Talk slow. Be very methodical. If you talk fast and you come off as nervous, it's going to turn people off. Remember, people are paying more attention to how you say things than what you actually say. If you are hopping on and pitching your deal for the first time, in other words, this is the first time that you have actually presented, you failed. You should be able to pitch in your sleep. You should have done this thing 20 times before so that everything rolls off your tongue. You're excited about it. You're enthusiastic, because that's what's going to sell your deal, not the words you say. It's your tone. It's your confidence. It's your excitement. Practice, practice, practice before you pitch. The second is don't use industry jargon. I can't tell you how many times I get on. I was listening to something the other day, and the guy was throwing out all these terms that I had no flipping clue what they meant. And I was like, I don't want to watch this anymore because I don't understand what he's saying. Don't use your industry jargon. A good rule of thumb that I like to follow is make it so a third grader can understand it. If you do that, you're going to be fine. And don't use the words guaranteed. That's a no-no. You're not allowed to use the word guaranteed when raising money. Nothing in life is guaranteed. That's a good way to get into trouble with the SEC. You are not allowed to say anything is ever guaranteed. So don't use that word. Bad word. The do's. Another big mistake I see people make, and especially with accredited investors. So people don't make this mistake as much when they're pitching their friends and family, because their friends and family already know them and like them, is they don't pitch their self. When I'm presenting in front of people that don't know who I am, as well as my friends and family, I make a point to talk about my story, my background, the number of deals that we've done. I'm pitching myself more than I'm pitching the deal. Because what you'll find in this business when you're raising money is nobody cares about your deal. Nobody cares about Cardone Capital. They're investing in Grant Cardone. You're creating a personal brand around your capital raising business because that's what people invest in. They're investing in the person. They don't care about the company name or the company logo. They want to invest with Brandon Cobb and Vageef Sadov. They don't care about HBG Capital. HBG Capital doesn't mean anything. Brandon Cobb and Vageef Sadov are the names that they care about. So make sure that you're pitching yourself when you are doing these presentations. The sooner, the better. Second thing that you want to do is make it simple. So I'll talk about this in a second, but if you don't simplify this, you're going to completely lose people. This is the number one rule, and I think the next slide actually talks about it. I've made a slide that's so important, and we're going to talk about how to make things simple. Make it professional. Don't cheap out on your pitch deck. I've given you guys an opportunity to get our free pitch deck. You can copy and paste the information, hire someone to replace it, but you want something along those lines. We talked about practice already and making a third grader understand it. The last do's when it comes to pitching is talk about the risks. When you talk about a deal and it's all amazing and nothing's wrong with it, that is balagna. That is baloney. It's my word for balagna. You want to talk about what the risks are of that development. This comes across as honest and transparent. And again, people aren't judging what you say, or they're judging how you say them. Number one mistake when pitching, a confused mind does not make decisions. Make it simple. So what do we do here at HBG Capital? We find off-market land deals, number one. Number two, we get that development approved by the city. This increases the value when we turn it from farmland to new housing community. Step three, we develop that land by putting the roads and infrastructure and everything in. This further appreciates the value. And step four, we sell that land to another builder or developer. Very easy to understand how we make money. Don't complicate the process. Okay, we've pitched our deal. Now what do we do? Now's the exciting part. This is the replay. This is the email that goes out after you've pitched your deal. Hey, first of all, thank you for everyone who attended last night's release to discuss our new offering. For those who are unable to attend or who would like to review the webinar again, you can access the recording via the link below. Click here to access the investor presentation. Hey, if you're interested in investing, step one, ask questions. Step two, send a soft commitment amount. Step three, review and sign the paperwork. And step four, you can fund your investment. Reminder about the funding timeline. As a reminder, the verbal commitment deadline for this offering is March 20th. We'll be closing the first week of April. If you have an interest in investing, please send your soft commitment so we can update your investor portal or grant you access if this is your first time. Want to learn more? Click here to watch the presentation. Next email. This is step 5. This is where we start creating scarcity. First come, first serve. This is the email that goes out and really starts to build scarcity. Hey, thank you so much for those who attended and quickly submitted your soft commitment amount for this opportunity. Due to the response from our investors, we are, due to the overwhelming response that we have received, that we anticipate the opportunity will now be oversubscribed due to the verbal commitment deadline. Make sure that you send everything in. Again, if you're interested in reserving an investment amount for this opportunity, follow the steps below. This is an email that I sent out and said, hey, we're 48% subscribed to the deal, so we got about half left. Next email that goes out, we're 72% subscribed. Hey guys, we're filling out. Again, due to the response from our investors, we've already received 72% of the total investment. We now anticipate that this opportunity will be oversubscribed prior to the verbal commitment deadline. If you're interested in getting in on this deal, follow the steps below. Please note that reservations will be accepted on a first come, first served basis. If you have any questions, don't hesitate to reach out. And finally, always, always, always send your oversubscribed email. Thank you so much for all those who attended and moved forward. The response has been a bit overwhelming, but it's very good to see our investors share our excitement for our unique opportunity. The opportunity is now oversubscribed. We are taking backup commitments on a wait list, but we will not be able to include investors who have not already sent in their self commitments. If you're interested in getting on the wait list, you can follow the steps below. If you were hoping to invest in this deal but didn't get the opportunity, please reach out to me directly and I'll be sure to give you a heads up when we send out our next opportunity. We're always working to include new investors in our group, and we would love to accommodate you in the future. Again, thank you so much for those who have already reserved your investment amount. We look forward to watching this investment perform. If you have any questions, let me go. The reason why it's important to send out the oversubscribed, this is what creates FOMO, the fear of missing out. Oh my gosh, I actually missed this opportunity. If you're not sending the message that your deals are filling up and they're filling up quick, then you're going to struggle to move those people that are on the fence. This is how you move people who are on the fence from thinking about it to actually invested. And this, guys, is how you raise the money to do cool deals like land development and creating new communities. So we are going to be launching our land development mastermind. As I told you, there's a 6-part series. We're doing all this free training. It's 6 hours of free training. It's a lot. There's people that want more. And honestly, we're just scratching the surface on this stuff. So if you like what you saw today, if you've liked what you've seen in the past presentations, there is a wait list right now for the mastermind. So there's a ton of interest. We're building everything out. But here's a little bit more information about it. We're going to have the land development accelerator program. We're going to have the capital raising machine, and we're going to have the mastermind community. These are the 3 parts that make everything up. The first part of that land development accelerator business, we were trying to figure out what the value is of all these things that we're going to offer, and we would put the value up next to it. Obviously, we're going to charge this. We're going to make this a no-brainer for people. But if we were to just give the business systems and processes for our land development accelerator program, I'd probably charge 10 grand. Because I know that you're going to get 10x the value there. We're going to have our land acquisition blueprint that lays out a step-by-step process for how to target and acquire the land, and we're going to go in like the nitty-gritty. We've got our land sales training. So this is the exact scripts and talk tracks on what to do and say and how to handle the objections with the sellers and how to get people to the finish line and create win-wins. You're going to get our entitlement and rezone blueprint. So if you don't know how to entitle land or rezone it, we're going to teach that. We're going to have our civil engineering management guide. I can tell you that if you know how to manage a civil engineer, this can save you hundreds of thousands of dollars, and sometimes millions, depending on it, in costs on how to properly manage and design the neighborhoods. I mean, this is huge. I probably should put like $30,000 or $40,000 next to it because that's a 6-figure savings right there. We're gonna have our deal structure guide. If you don't know how to structure your land deals, we're gonna teach you how to do that. If you want all our contracts, all of our documents, all of our literally everything, we're going to have a whole folder for that. So just for the land development accelerator program, we'd probably charge somewhere around $27,000. For the capital raising machine, we're going to get our compliance guide that's going to keep you out of jail. We're going to give you the foundations deep dive training. So last week we talked about building your foundation for raising money. Like we do a deep dive training on all that, like the blueprint on how to properly tell your story, everything that you need on how to build your podcast that you need, the channel, the videos, what to say, do, basically a copy and paste deep dive training so that you've got the right foundation to go start raising money. We're going to share all of our automations that we use and the templates like what you just saw. You're literally just going to be able to copy and paste those. We've got a complete guide on how to raise on friends and family. We've scratched the surface on this today, guys. Unfortunately, in 45 minutes, I can't go into every single thing there is that you need to do to raise friends and family, like how to optimize it. But we're going to be giving away this guide and everything A to Z, soup to nuts on how to raise friends and family. We're going to be giving away the complete guide on attracting endless accredited investors. This is where you can really blow it up. If you want to raise a couple $1,000,000, you can do that with your friends and family network. If you want to raise tens of millions of dollars, you're going to have to figure out how to attract accredited investors. Stay tuned for that next week. I'm going to do a free training on how to do that. We're going to give you our investor sales course and scripts. So if you want to know, like if you have a potential investor on a call, what do you say? What questions do you ask them? How do you close them? We're going to give you the actual scripts on what to say to close them. You're going to get all the email templates that we literally use to raise millions of dollars. And this is probably one of the surprising things. There's people that pay us just to show them how to set up their fund and their syndication. So they're not even part of this community. They reach out to me and they say, Brandon, can I give you money? Because I've got some people that want to give me money. I don't know how to set up my fund or syndication. And we charge 10 grand just to do that alone, just to help them set that up. So we're going to have that as part of the community here. Also, once you get people to give you money, we're going to teach you how to keep them for life. So delivering the right kind of experience to really, you want to be able to keep the people and give and have them keep coming back. And most importantly, refer their friends and family. So if we were just charging for the capital raising machine, we'd probably charge like $30,000. We're also going to have the mastermind community. And guys, I didn't even know what to charge for this. We're going to do a hour-long call every single week to answer your questions. You're going to get 24/7 access to everybody in the community. So these are other people that are developing neighborhoods, developing big mixed-use communities. They have stuff that's working in their business that they're going to share. And so that's the real power of this is the community. You're going to get access to everybody. We've got weekly non-negotiable tasks that you need to do to be successful. We're going to help you implement everything. You got the support there, and you'll have access to all of our internal systems. So like total, I think it all came out to like 60 grand minus the mastermind stuff. I don't even know what to charge for the mastermind thing, but we were thinking, hey, 57 grand for everything. We're going to have an entry level price for the first 20 people of 10 grand. And the only reason we're not charging $35,000 is we want to get testimonials from these first 20 people and just get the community started. We wanted to make it an absolute no brainer. So we're just going to charge 10 grand for this. There's a 30-day money back guarantee. You can literally go through all the land development accelerator modules, all the capital raising modules. You can get access to the weekly trainings for 30 days. If you don't feel like you've 10x your investment, then we will literally just give you your money back. So you can literally go through everything, copy and paste all the lessons learned, take all the information, and on the 29th day say, you know what, this doesn't work. You guys are full of crap. Give me my money back and we will give you your money back. And like I said, we have a wait list. I think we've got maybe 11 spots left right now. Right. So we're not officially launching. So if you want to join the wait list, send your email to info@hbgcapital.net. Or better yet, the phone number. If you can send it to 901-596-6425. Tara, if you can put that in the chat, my phone number, because for some reason there's a lot of there's a lot of stuff that's going to spam, unfortunately, and we don't catch everybody. But if you send to that phone number, we will make sure that you get access and you can join the wait list. All right, guys, that's it for today. Let's open it up to some questions. Tara, do we have any questions in the chat? Or the Q&A section, whatever it was called.
Set up before taking the money. Does that apply to friends and family or only accredited investors?
So I highly recommend that. And here's okay. So let me tell you a story about how.
So yeah, repeat
the
Okay.
question because they
So
can't hear you.
PG, yes. So PG said last week, you said we need to get set up before taking money. Does that apply to friends and family or only accredited investors?
Here's the secret. I'll tell you a story about how we made a big boo-boo. We set up an international fund and we paid somebody $30,000 to set up that international fund because we thought we were going to raise a bunch of money from these international investors. And we spent $30,000 and raised $0 from that international fund. Complete $30,000 mistake. Here's what you need to do. The SEC only cares when you are taking people's money. You can do something called a soft commitment, which is what I highly recommend people do instead of you going and spending the money. First, always pay an attorney to get their advice, right? Say, hey, this is what I plan on doing. Is this compliant? So that's step number one. Step number two, and this is kind of, you can go this route. We're pretty confident in our ability to raise the money, but if this is like your first deal, and again, run this by the attorney, but what I would do is I would get soft commitments from people. It's just a piece of paper saying, hey, I pledge this amount. And once you have enough soft commitments on a deal, then you can go and pay the money to get your fund or your syndication set up. You're compliant because you're not actually raising money. You haven't actually taken people's money. You're just getting soft commitments amount. And this is a great way to avoid having to pay a lot of money to an attorney and a lot of headaches setting things up, especially if this is your first time doing it and you're not sure how much money you're going to be able to raise or if you're even going to be able to raise the money. So get the soft commitments first. And once you've got enough of those and you feel confident, spend the money to get your 506B set up.
And when you're saying talk to an attorney, we are going to, we have attorneys that we use. You don't have to use the attorneys that we use. We'll give you some recommendations from attorneys that we
Yeah, and the mastermind, we've spent hundreds of thousands of dollars on attorneys. There's good attorneys and there's bad attorneys. There's attorneys that take your money and you literally never hear from them again. There's no support. You need an attorney that's going to kind of hold your hand and not charge you an arm and a leg. And so I can literally probably save everybody $15,000 that joins the community just on attorneys alone, because we know who the good attorneys are, and so we'll be sharing who to use in the community. Great question.
What type of equity did you raise? Common or preferred equity?
All depends on what you're trying to do. It does not. It all depends on your deal and what you're trying to accomplish. I can tell you that most deals have there's usually 3 classes of shares. Number 1 is Class C shares. This is for the general partners, the Keith Sadoffs and the Brandon Cobbs. Class B shares are for the investors that invest $50,000 to $250,000. And the Class C shares are the investors that invest $250,000 or more. Or, I'm sorry, yeah, Class A. Sorry, yeah. So Class C, general partners. Class B, investors that invest $50,000 to $249,000, and then Class A is investors that invest like $250,000 or more. Because you want to incentivize people, give them incentivizations for investing more money. So that would just be your common equity type of raise. You can do preferred equity and mezzanine structures and getting through all that. But if you're raising from friends and family, you're not going to need to get into all that. That's when you get into like accredited investors. I can tell you people will build in preferred shares and they won't raise money for it unless they need to. So the last 2 years, there've been a lot of foreclosures in the commercial and multifamily world, and people had to go in and start raising preferred equity in order to have the money to refinance their multifamily property to prevent a foreclosure, or have the money to buy the rate cap so that they could continue with their current interest rate, because those rate caps are very expensive. And if they didn't have that preferred equity built in there, they would have lost a bunch of money, basically.
Yeah, but on the land development stuff, I think, people love simple. So as simple as you could, make it, the better.
Yeah.
You can get real sexy with it, with spreadsheets and formulas and waterfalls and all that. But especially if you're just getting into it, I would strongly recommend keep it as simple as possible.
Yeah, keep it simple. Yeah, good question.
All right. Diami says, what's the promote structure you are using?
I have to have a little bit more context around that. The way we structure things, there's so many ways of doing it. We've done deals where, we've just done a pure debt position and we've made all the investors like the bank on the deal. We've done deals where we've raised 50% equity, 50% debt. So you can literally slice and dice it any way that you want. There's no perfect way of doing it. Profit split with your investors. Well, that's easy. We do an 18% preferred return. So most of the time, that's our structure. So we do a 100% waterfall to the investors. Once they get paid all of their principal plus an 18% preferred return, then our firm profits on the remaining. So the investors don't get to participate in the equity upside, but they get a very generous preferred return. We felt like this aligns the incentives with the general partners with to perform with the investors' incentive to get their money plus their return. So an 18% preferred return, 100% waterfall to the investors until they get that.
And for all of you guys, just if anyone has any questions, so we grabbed the 18% because it's equity. Now we can go and take that, put it in the bank account and lever, right? Lever that capital to go get bank debt at a lower rate. So then your whole entire capital stack is a lot less. So that's why.
Yeah. Like when we were, building a lot of houses and, if we had $1 million, for example, you can take that $1 million and you can go get $4 million of debt. Well, so what kind of profits are you going to have on $4 million of debt? Probably around $800,000, hopefully 20%. So there's $800,000 of profit on a $4 million deal, however many houses that is. And you got to think about it, if you're paying 18% on $1 million and it takes a year, you're paying $180,000 out. So I don't mind giving the investors $180,000 of the $800,000 of profits.
That's right. Well, I think that's it for the questions. Anybody have any other questions?
Yeah, guys, if you got anything else, any more questions, then we will let everybody go about their day. Again, if you've got any interest in the mastermind community or any of these, individual courses, shoot us a message to 901-596-6425. If you want the free pitch deck that we've got, again, same thing. Send your email to that phone number that we got right there. Here it is, 901-596-6425. We'll make sure that pitch deck gets sent to you guys. And with that, we'll let you guys go about your day. Thanks for showing up. It was good to see everybody. Next week, we'll be talking about how to raise capital from accredited investors. We'll see you guys next time.